Good evening, everyone. Who's missing? Swarna. Everyone is available, right? Yes. Okay, so what was the topic we covered till now? The last class?
Self-employed.
Yeah, self-employment.
Partnerships.
So we covered general partnership and limited partnership,
Limited
right?
partnership. Yes, sir.
Okay, so we'll start with S corporation today. Okay, is my screen visible?
Yes, sir, it's visible.
Okay, so S corporation or S corp income. Okay, this is also one of the type of partnership income wherein borrower or another, borrower and another member is a part of the business, and borrower only applying for the loan. Okay, so we'll have to ensure that we need to check the ownership of our current borrower and what is the profit percentage of current borrower. Based on that, we'll be qualifying the income. Okay. Yeah. Can someone please start reading this?
Yes, sir. An S corporation is a legal entity that has a limited number of stockholders and elects not to be taxed as a regular corporation. Business gains and losses are passed on to the stockholders. An S corporation has many of the characteristics of the partnership. Stockholders are taxed at their individual tax rates for their proportionate share of the ordinary income, capital gains, and other taxable items. The ordinary income for S corporation is reported on IRS Form 1120S, with each stakeholder's share of the income reported on IRS Forms 1120S, Schedule K-1. Because this income from the distribution of corporate earnings may or may not be distributed to the individual shareholders, the lender must determine if the borrower received a cash distribution from the S corporation. The cash flow of an S corporation is otherwise evaluated similarly to that regular corporation.
Okay, this is S corporation income wherein borrower, it's a legal entity. Okay, that is having the limited number of stakeholders, number of shareholders. Okay, so here we need to check the borrower's personal tax returns as well as the business tax returns along with the K1, Schedule K1. Okay, in this K1, we'll be having the borrower ownership details and what is the contribution, what is the capital from the borrower, and how the profit shares from the borrower. It will be reflecting over there. I'll show you the documentation. Okay, corporation income. Swarna, can you please read?
I think she's not able.
Corporations. Yeah, I'm fine. Right now.
Yeah, go ahead.
Corporations. A corporation is a state chartered legal entity that exists separately and distinctly from its owners, who are called stockholders or shareholders. It is the most flexible form of business organization for purposes of obtaining capital. A corporation can be sued, hold, convey, or receive property, enter into contracts under its own name, and does not dissolve when its ownership changes. There are two types of corporations: public, publicly owned, widely held corporations, and privately owned, closely held corporations. Because more than 50% of the outstanding stock of the privately owned corporations is owned directly or indirectly by no more than 5 people. The corporation has little or no access to public funds and must raise capital through institutional financing. Although legal control of the shall I read?
Yeah, go ahead, go ahead.
Although legal control of the corporation rests with its stockholders, they typically are not responsible for the day-to-day operations of the business, since they elect a board of direction to manage the corporation and delegate responsibility for the day-to-day operations to the directors and officers of the company. The distribution of profit earned by the business is determined by the corporation's board of directors or other entities that have a significant financial interest in the business. However, the profit usually are filtered down to the owners in the form of dividends, since the stockholder is not personally liable for the debt of the corporation. Losses are limited to their individual investment in corporation stock. Corporations must report income and loss on IRS form 1120 and pay taxes on the net income. The corporation distributes profits to its shareholders in the form of dividends, which it reports on IRS form 1099. Div. The shareholders must then report the dividends as income on their individual IRS form 1040.
Okay, so the corporation income mostly the borrower will not get as a money or something. Okay, the shareholders, the dividend income they will get from the corporation business. Okay, so corporation business is like a let's say it's a government entity's shares holder. Okay, so let's say if you're taking a shares from the SBA account, SBA bank, or if you're if you're taking a shares, if you're buying a shares from any other government entity, uh, shares. Okay, so that will gives you a entity, that will be corporation income for you, that will be a dividend income for you. So for that we can verify that income in double one two zero. Okay, that's a corporation income tax return. Also we can verify in 10099, there is a dividend income. Okay, so the tax shareholder or tax holder have to be file the tax return, that is a 1040, to verify all the incomes from the corporation income. Okay, so this is little bit, would say very slightly we will get in this scenario, because most of the it's very critical to get this income. Okay, so as corporation you can say you will get everywhere. Okay, that's kind of private lending, a private entity you can say, but the corporation is kind of state chartered legal or the government entities. To be a part of shareholder for the government entity, it will be difficult, that there will be a lot of formalities and that has to be done before that. Okay, so income or loss reported on IRS 1065 or IRS 1120 Schedule 1. Okay, so we'll have to verify the partnership income. Okay, that is in 1065 along with the K-1. As corporation reported 1120 K-1, and LLC reported in 1065 from 1120 Schedule 1, depending on the how the federal tax return are filed for the limited liability company. Okay, LLCs. Okay, so the lender must use a caution when the including the income that borrower draws from the borrower partnership or the S corporation as qualifying income, ordinary income, rental, real estate income, and other net rental report on the K1. Okay, so most of the time, okay, when we are seeing the 1040 or sorry, 1120 or 1065, so people, the borrower will get the ordinary income, or they will get the net rental income for the real estate, okay, from the K1. That has to be reported in the K1. Also, we need to check the cash flow, how the cash flow is, working on the business. Okay, is it very limited cash flow, or there is a lot of cash flows? The lot of cash flow also is very riskier than the limited cash flow, because if your cash is coming and going in the flow of the cash in the business, it should be very limited, right? The borrowers are 2 years of history receiving guaranteed payment to the partner from a partnership or LLC. This payment can be added to the borrower's cash flow. Okay, so borrower is getting, okay, there's a guaranteed amount, let's say, from the LLC or from the K1 income. Borrowers getting, let's say, 10,000 apart from the shareholder shares profit. If he's getting 10,000 every year, okay, 10,000 every month for more than 2 years, okay, then that will be also can be considered qualified income for the borrower. Okay, so if the K1 reflects a documented or stable history of receiving cash contribution of the income from the business consists with the level of business being used to qualify, then no further documentation of access to income or adequate business liquidity is required. But if the K1 does not reflect the documented stable history, then lender must confirm adequate business liquidity, and as discussed. Okay, I'm just giving the example here. Okay, so we need to verify the documentation. Okay, if the borrower is given details in the K1, okay, the stable income, how the stable income verifies in the K1, or else uh, liquidity required for the business. If it is mentioned in the K1, we don't require additional documentation, or else we would require how the borrower, adequating the business liquidity. Okay, it is important that lenders select the business liquidity formula based on the business operates. So this is the quick ratio. Okay, you will get the questions from the interviewer. What is the quick ratio? How do we calculate? Okay, so this is very important. So if the quick ratio is more than 1, yes, it is. Wait. Yes. So if the more than 1, that means the borrower having stability, okay, in the income. If it is not, then it is a question mark. Okay, so it's not a stable income, right? Okay, so quick ratio, how do we calculate? Current asset minus inventory. So what is the current asset borrower having, and inventory, what are the purchase they have done, divided by current liability. Okay, so you will get the percentage, 1% or more than 1%. Okay, so then the current ratio, current asset divided by current liability. Okay, that means current asset divided by inventory, you will get the current address, so assets. And if you get if you get the current asset total minus divided by the current liability, you will get the current ratio. While here result of 1 or greater than, while a result of 1 or greater is generally sufficient to confirm adequate business liquidity to support the withdrawals of earning, lender may support the adequate liquidity using the alternative methods with the documented rationable. Okay, so if the current ratio is more than 1%, that means borrower having adequate uh, liquidity to support the withdrawals for the earning. Okay, so withdrawals means they're getting the profit sharing, right? So if they have current ratio is more than 1%, then that means they will be able to withdraw their earnings. Okay, if it is less than 1%, that means there is a purchase plus the liability. Okay, asset and liability both are equal. There will be no losses, there will be no profit. So that if the no profit, then borrower may not get the earnings from the business. Okay, any question on this?
What is inventory? What comes under inventory?
Inventory is like purchases. Okay, so say for the business purpose, we'll be purchasing the product, right? So
Okay.
that will cause us inventories.
Okay.
Okay, so current asset amount minus inventories, what are the inventories they have purchased, divided by current liability.
Okay.
Okay, now this is a form numbers and the title. Okay, you guys can take a screenshot or whatever. If you guys want to note it down, you can note down. We'll be seeing the all the form schedule B, C, D, E, F, and the 1065. I think we already discussed, right? 1099 and the 1099 dividend income. Did we saw the document before? So if not, I'll show that. Or else I'll be sharing the documents with you on the WhatsApp. Okay, and I'll be sharing all the schedules with you by today end of the call in the WhatsApp, so that you guys can go through before you're going for a interviews.
Okay.
Okay. So are you guys taken the screenshots?
Yes, sir.
Others?
Yes.
All right. So 1040 Schedule B. So Schedule B, interest and ordinary dividends. Okay, let me share my screen again. Wait. Okay, I'm sharing my screen again. Okay, is my screen visible, guys? What document you are seeing now?
1120S.
Okay, so 1120 years. Okay, instead of 1120 years, you can call it as 1120 years. So
Okay.
usually in the US market, we will spell like this only. Okay, in the US. Okay, yeah. So double one two zero is that's for your S corporation income. Okay, so you can verify the details over here, name, borrower name and everything, and the employer identification over here. Okay, is the corporation elected to be an S corporation beginning with this tax year? Then it should be yes. Okay, and we'll have to check this. It is a final return or is there any changes over there? Okay, now so here the total income. There is an ordinary income, total ordinary income. Okay, gross receipts of sales less returns and allowances. Okay, balance will be the final one, 1C. Okay, and the cost of goods sold, gross profit of subtract 2 from line 1C. That means cost goods of sold minus the gross receipts or sales. Okay, you will get the gross profit. Okay, and the net gain and other income, is there any is available? Okay, if not, it will be 0 and you will get the total income of this product minus you will get the compensation of officers, salary and wages, repairs and maintenance, bad debts, rent, tax. All the expenses will be, everything will be updated over here, and the total deduction in the line number 21. Okay, so if you deduct 21, this one, the deduct minus 21 6, this total income, you will get the total net ordinary income of the borrower. Okay, so mostly you will see the interviewer will ask question where you will identify what is the line item you will get the ordinary income or ordinary business income from for the borrower. In the 1120 years, you can see 22 line item. Okay, so line item is very important. Okay, before you're going for the interview, just go through this entire tax return, so you will understand what is the information where it will be updated. But mostly they will ask this only, not others. Okay, so they will ask what are the deduction you will be deducting, because most of the companies, right, those who are doing underwriting, okay, so they will use excels. Okay, you just need to capture the data from the document, and the excel will automatically calculate the income. Okay, so they will formulate the income based on their client requirement. Okay, so again I'm telling, client requirement is different. Okay, the basic is different. We are going through the guideline where everyone is follows. Okay, but the client requirements that is different. That based on the clients it will be vary. Okay, that we cannot predict, and we can discuss that as well. Any questions?
Sir, if the interviewer asks which tool you've worked on, you can say directly Excel, right?
No, you cannot say Excel. Excel is not a tool, right? You can say the Encompass or Citrix or Clarity or what else we have.
Okay.
And there is one applications called Loan Vision. Yeah, that application is there. Okay, so you'll have to do a search on the
Okay.
Google or YouTube. You will get the Loan Vision application, how they are using and all. But we cannot predict, right, which company what they are using. But most of the company, they have the excels.
Okay.
Okay, so you can say we are updating the all the information in the excel. Post that we'll updating, capturing the what is it, Encompass or applications.
Okay.
Okay, so if you're using the Encompass, there is no need of using Excels.
Okay.
Okay, because in Encompass itself is a pre-built the underwriting application.
Okay.
Okay, so mostly if we working on the freedom client, okay, if you're working on the which one? There is one client called FGMC. Okay, for them, okay, they're using Excels to calculate the underwriting. Okay, so
Okay.
this is the important for the line 11 20 years. Okay, and here there is another information also. Here you will get the name of the corporation and the employer ID, country of incorporation, percentage of stock owned, and percentage in 100% enter the data if applicable as a qualified subsidiary election was made. That means the only one borrower, if the only one had owner having the 100% of ownership, then we'll have to fill this. If not, this much enough. Line number, this one, 2, 3, 4. This is enough. Okay, for the borrower details. Okay, and this is the shareholders pro rata shares item. Okay, ordinary business income loss, net rental, uh, net real estate income or loss, and the gross rental. So everything is updated over here, and ordinary dividends, qualified dividends. So what is the ordinary dividend means? What is the exact amount is giving or getting from the dividend income, and the qualified how much is for borrowers dividend. Okay, and this for the you guys know net short term and long term capital gain. So we can check in the schedule D. So mostly if it is available, we can check in the schedule D, and for 1120 years also we can check, or else it is not required. If it is not available, no need to check everything. Okay, these are the deductions for the borrower which they are getting, and the credits. So this is a balance sheet per book. That means they will get the cash flow analysis. Also, they will give the balance sheet. But so that has to be matched with this schedule L from the 1120. Okay, so what are the income they will get? What are the expenses? And the last 2 years you will get, right? Beginning of the year and the ending of the year. What is the for ending beginning of the year balance and end of the balance? So what are the when we are declaring the tax returns, right? So we will update all the expenses or income. Okay, what will the comes through? Okay, what will the end of the balance we will get from the business? Okay, all the details will be available updated over here, and we need to qualify. We need to check with cross check with the balance sheet or the cash flow analysis. Okay, this is also same. Okay, what are the profit percentage? You will get the ordinary income, everything. Page 1, line item 22. So if you can verify the cross verify that, so you will get everything. This is the line 1120. Yes, and this is the corporation income 1120. Okay, same type only. Okay, there will be slightly changes over here. Is it visible, guys? Any questions? Someone unmuted. No question. Should I
No,
continue?
sir. Yes, sir.
Yeah. So you can check what is the difference over here. Okay, most of the time, no, there will be no difference. And here, net operating income loss is here. Okay. So what is the line item in the 1120 years? Hello.
20, 22,
22, right? And 1120.
29.
29. Okay, so we'll get the profit and the losses over here. Just a minute, guys. Sorry, guys, I'm back. Okay, I'm sharing the screen. Right, so here 1120 you'll get the net operating or loss income. Okay, and the tax income, taxable income. Okay, so what are the taxable you will be get, and the total tax. Okay, so what are the tax they will get? Okay, what are the tax deduction? Okay, borrower will get. So everything will be updated over here. The schedule C from 1120, dividends inclusion and the special deductions. Okay, so these are the default percentage. Okay. Okay, so you will get the dividend income. Okay, dividends from the less than 20% owned domestic corporation. What is the amount they will get? Okay, so into 50% you will get that. Most of the time is not required. This is a tax computation, total payments and credits. Schedule K, normal. What is the how they using the cash? Okay, how they proceeding with the business? Okay, business activity code number. Okay, product and service. So all the details will be available over here. And this is the partner name and the employee identification number, county of incorporation, and the percentage of the stocks. That means of ownership. Okay, we'll get over there. And so here also we'll get the balance sheet and the reconciliation of income loss per book. Per book means profit and loss or balance sheet book. Okay, we will get the all the details over here. Okay, so please go through this. Okay, M1 and M2. Okay, when I'm sharing this document. Okay, if you have any questions, you can ask me on this. Okay, this is also self-driven. That's why I'm not explaining everything in detail. Okay, so you guys can understand easily. So if it is not understand easily, I can explain everything with you all. But I just want to show you the document so that you guys can understand and you can explore it. This is 1120, and this is farm income. Sorry, income from farming. Okay, just to know. Okay, this is not mostly important. You will get the 1120 years. Okay, if anyone ask. Okay, and the farm income you will get mostly is for the USDA loan program. You will get it. Okay, schedule F. Okay, this is schedule C. That is the sole proprietorship income. You guys are know we already discussed how to calculate and everything. And this is for the 1199. Okay, so broker compensations or broker and barter exchange transactions. Okay, so this all the here you will get the proceeds. Okay, proceeds from the sales. Okay, and account occurred market discount, and you will get the federal tax details over here. Okay, this all the information will be available, but the proceeds will be taking 1 day. Okay, so you can if anyone asks, you can just tell me that 1 day will get the proceeds. That will be important. Okay, this is also 1099 dividend and contributions. Okay, total capital gain distribution. So what is the amount the borrowers getting as a total capital gain? Okay, these are the very important documents I would want to show you guys so that you guys can go through it. Okay, and you can just refer always when you're going for the interview, they will ask. So most of the question will be shoot based on the credit and the self-employment. Okay, very rarely people will ask about the wage income, but the self-employment and the credit, you guys have to be thorough. Okay, and I have created the question bank. Okay, most of the PPT which I'm covering covered throughout the training. Okay, so based on the questions, okay, based on the Fannie Mae guidelines. Okay, so
Okay.
you must have taken the notes, right? Okay, please go through it. Okay, also I'll be sharing the question bank with, I think I have created a question bank with 45 questions. Okay, so that will help you guys to crack the interview. Okay, let me complete the remaining of the slide of the day, then you guys be ready for the interviews. Okay, wait, let me share. Where's my PPT? Okay. Okay, so now as of now we completed all the income types. Okay, self-employment. In that self-employment we have seen partnership as corporation income. Okay, and the dividend income and all the schedules we have seen, right? Now we are going to see what is the desktop underwriter. Okay, that means a DU, and there in this DU we will have the recommendations. Okay, approve ineligible, approve eligible, approved, refer with caution, approve, out of scope. Okay, these are the recommendation we come through. Okay, and you may get the questions from the interviewer also. Okay, what is mean that approve, refer with caution. Okay, so please take a note so that you guys can answer the questions whenever it is required. I'm sharing my screen again. Can someone please read this out?
Desktop underwriter. Underwriting with DU. Lenders must enter loan data, including data from the Form 1003, in their loan origination system or in the DU user interface before submitting for underwriting. A credit report must also be obtained. Loans may be submitted to DU before or after the closing of the mortgage loan. However, the first submission to DU for underwriting purpose must occur before closing of the mortgage loan. When the mortgage loan or the borrower information changes and it no longer matches the information used when the loan case file was last underwritten with DU, the lender must update the data and resubmit the loan case file to the DU.
Okay, underwriting with DU. Okay, that means the DU document, that's a desktop underwritten AUS or AUS with LP also will be available, right? So AUS documentation, it's a kind of replica of Fannie Mae guideline. Okay, so if you receive the most of the time it will be available for the secondary marketing. Okay, not in the live underwriting. Okay, so not live underwriting, you'll have to follow the lender guideline and the Fannie Mae guideline. And for the secondary marketing, those who are doing a post-close underwriting, right? For them, they will get AUS documentation. So we'll have to follow the AUS guideline. Okay, so say for example, if AUS mentioning that we need to verify the wage income with written BOE, then if you have written BOE, it's fine. Okay, and if you have pay stubs and the verbal BOE and written BOE is missing, we need to add a condition for that. Okay, that means AUS is approved, AUS is given, and based on the written BOE only, the loans must get approved, right? So that's why we would require the written verification of employment. Okay, so pay stub, the income may vary, right? And return verification is a strong documentation to calculate the income. Okay, so what are the income? What are the documents mentioned in the AUS documentation, the AUSD documentation? We would require to verify that as well. Okay, now DU underwriting recommendations. Why DU underwriting recommendations are required, and what will be the cause for the recommendation? Okay, when underwriting loans with DU, the lender must employ prudent underwriting judgment in the assessing whether the loan case file should be approved and delivered to the borrower Fannie Mae. Okay, that means a secondary investors, right? So we can assess the borrower's profile based on the Fannie Mae guideline. Then we just come to know that whether we can say that the file is saleable to the investors. Okay, the Fannie Mae's. Okay, confirm the accuracy of the loan, accuracy of the data it submits, making sure that it did not fail to submit any data that might have affected DU recommendation that had been known. Okay, is there the data accuracy of the say for example, so the AU is mentioning the bankruptcy and there is a paid off. Okay, it has mentioned the paid off. Then we have the credit report stating that the bankruptcy is still on. Okay, the bankruptcy is not closed yet. Okay, then that's the inaccuracy of the data, right? So we'll have to ensure that whether we have the documentation in the file that supports DU recommendation. Okay, so the bankruptcy is closed and the what are the documents we have in the file is not sufficient to support that recommendation, then AU's recommendation will be going in the wrong space, right? So we'll have to ensure cross verify everything. Okay, from third point, can someone please read? Those who are not read it, Imran or Viranji, you guys can read, please.
Ensure that the loan complies with all of the verification messages and approval conditions specified in the DU underwriting findings report.
Wait.
Apply. Okay.
Go ahead.
Apply due diligence when receiving the documentation in the loan file. Review the credit report.
Okay, what is due diligence? What is due diligence? What does it mean for due diligence? The board. No idea, guys? Yes or no?
No, sir.
No idea.
Okay, so due diligence means verifying the accuracy of informations. Okay,
Like double checking, right?
Sorry?
Like double checking.
That can be double checking, but due diligence, we need to put some strategy involved into that. Okay. So, for example, if a DU is recommending one income, okay, but what we have calculated manually is coming otherwise. Okay. So we are trying to match, but we are not matching the areas just like that. Okay. But we need to identify how the income is derived. Okay, so from which sources they are using. Okay, do you have the supporting documents to that? Okay, these all the work we need to do. That's called as a due diligence. Okay, just like that, we cannot match the years amount which is mentioned over there, right? So we need to do the calculation from our end as underwriter, and that has to be matched with the DU. Okay. All right. Go ahead.
Review
Review
the
the
credit
credit report. Go ahead.
Review the credit report to confirm that the data that DU evaluated with respect to the borrower's credit history was accurate and complete.
Okay, so the DU also mentioned that how much the revolving account, what is the debts, okay, total debts of the borrower, that has to be mentioned in the credit report. And while we reviewing the credit report, we are calculating monthly payment of the borrower. If it is not matching, also we need to escalate it. Go ahead.
Determine if there is any potentially derogatory or contradictory contradictory information that is not part of the data analyzed by DU,
Correct. Go ahead.
and take action when erroneous data in the credit report or contradictory or derogatory information in the loan file would justify additional investigation or would provide grounds for a decision that is different from the recommendation that DU delivered. For example, if a foreclosure was reported in the credit report but was not detected by DU, that is, it was not referred in any verification messages. The lender must determine if the loan complies with the applicable guidelines.
Correct. So this is a best example. Okay, foreclosure was detected in the credit report, but it's not there in credit. I mean DU. There is a AUS. Okay, then that's one of the red flag you can say. So whatever we read here, okay, this can be a red flag for the for AUS. Okay, so you will get the interview questions. Please take down. Okay, so what are the possible red flags in AUS? Okay, so you can say that the areas red flag can be a borrower and the address details and the debts details, okay, and the income details if it is not matching with the original documentation. That means what is the original documentation? That's for income documentation. It's a pay stubs, W2, tax returns. These all the original documentation for the income. For the credit, it's a credit report. Okay, so this can be a part of a red flag in DU.
First, we have to manually enter the data. Right?
We'll have to check the areas. Okay, what is the income, how they are qualifying and all. Okay, they will mention borrowers qualify the self-employment or wage income. Okay, so if the self-employment, they will mention this is S corp or C corp or the partnership. Okay, so based on the that information, we'll have to look for the documentation. Okay, then we'll have to do our own calculation. Then what are the terms or calculation that has to be matched with the DU.
Okay.
So this is the approve eligible recommendation. Okay, so approve eligible means, so in the AUS documentation, you will get the recommendation. Okay, so the top, okay, whether it's approve eligible, approve ineligible. So if approve eligible, that means the all the details are met. All these all the 4 points are met. Can someone please read what is that?
Approve eligible recommendations. Satisfies Fannie Mae's credit risk standards assessments. Satisfies Fannie Mae's mortgage loan eligibility criteria. Eligible for sale to Fannie Mae. Eligible for Fannie Mae's limited waiver of certain mortgage eligibility and underwriting representations and warranties.
Okay, so we already told you guys, right? So AES is replica of Fannie Mae guideline. What we have gone through now till now, these all the Fannie Mae guidelines. Okay, so if the AES approve eligible, then they should match all the credit risk assessment, all the income liability, and the loan eligibility, whatever gone through now. Okay, so based on the Fannie Mae guidelines, the loan will be approved. That means the approved eligible for the selling to the investor guideline investors. Okay, and what is the approved eligible recommendation? Okay, the loan case file may receive an ineligible recommendation for variety of reasons, including the loan does not comply with stated product requirement or policy that apply to DU loans. The loans complies with the stated product requirement or policy, but as combination of product features or risk factors that place the loan outside of the FANIMAs. That means they are not meeting these four. Okay, out of four, the approved ineligible recommendation will meet only three of this. The first three will be met. Okay, then it will show the approved ineligible, and let's say it kind of very minimal risk here. Okay, some of the lender will process the file. So when I say some of the lender in my company also, we have some client, okay, wherein they will accept approved ineligible recommendation. Okay, so that depends on the client requirement. Okay, if it's the approved ineligible reason is it is not impacting the loan, impacting the borrower, impacting the, if not impacting the lender's profits, then we are good with that. Okay, so if it is impacting the borrower characteristics, then that's question mark whether we need to proceed or not. That will be given the confirmation by the who's that, lender or the client. Okay, so how the lender will respond for the ineligible recommendation? Go ahead, someone. Just read the examples. Or else you can read the entire thing. I'll explain the example.
When a loan case file receives an approved or eligible recommendation, the lender should review the DU loan data for accuracy and verify that all income, asset, and liabilities are accurately recorded and fully disclosed by borrower. Determine if there is any information outside of the data submitted to DU that could have affected DU's recommendation. In some cases, updating information may resolve the issue that resulted in the ineligibility. For example, if the loan is ineligible due to a combination of product features or risk factors that place the loan outside of Fannie Mae's current acquisition performances and constraints, the borrower may provide documentation of additional income to lower to debt to income ratio, to provide a larger down payment to lower the LTV ratio. Update the loan application data if applicable, and resubmit the loan case file to DU for an updated recommendation.
Okay, so approved ineligible, most of the time the borrower having the higher side of down payment or the LTV ratio is lower side. Okay, then it will be derived as a approved ineligible. Okay, because borrower LTV is less, then that will be the property also having some issues over there, because the LTV is derived based on the property value, right, and the loan value. Okay, if that is a less, then borrower needs to pay the larger deposit amount. Okay, that is a down payment amount. Then that will impact the borrower, stability, as well as the future. That will be risk factors of the lender. Okay, that's why it is approved ineligible. Okay, refer with caution recommendation. Refer with caution recommendation is a layering and the degree of the risk factor that results. Refer with caution recommendation represent the greater risk of the serious delinquencies that for those loan case file that receive an approved recommendation. Okay, that means the borrower having the higher side of delinquencies. What is the delinquencies?
Late payments.
Yeah, it's a late payments, right? Borrower having the higher side of late payments. Because of that reason, right? It is showing the refer with caution. That's very critical to sell to the Fannie Mae, right? That will be selling to the next level. Very critical to selling to the Fannie Mae. That's the secondary marketing. Okay, what's the lender response to the refer with caution recommendation? When the loan case filer receives a refer with caution recommendation, the lender should review the DU loan data for accuracy and verify all the income, assets, liability were accurately recorded and fully disclosed by the borrower. Okay, determine if there is any information outside of the data submitted to the DU that could have affected DU recommendation. Okay, so what they're saying, we have to verify everything. That's what I'm telling you. Know, you'll have to cross verify everything. Okay, we should not blindly update what is mentioned in the DO, right? The DO also can be incorrect. Okay, so manual calculation has to be done, right? So there is one scenario wherein it's approved eligible only. Okay, recommendation. Okay, so we are so happy because we don't require to verify the lender guideline. Okay, so we just go as per the AUS. Okay, that means very easy file. But when we are calculating the income in the application based on the document, it's coming very less, but AUS is showing it's a higher amount. That means it's kind of red flag for us. Okay, so the loan is approved based on the AUS. The AUS status is approved eligible, and the borrower is getting less income as per the documentation. Okay, so in this case, we escalate to the to the client, and that loan has been withdrawn. That means it is not going for the secondary marketing. Okay. Understand the scenario, what I say now? Hello? Hello, guys.
Yes, sir.
Yeah. Determine if there is any information outside of the data submitted and update the loan application data and resubmit the loan case file to DU for the updated recommendation. Okay, if there is anything, we need to update it. This feature is available in the Encompass to run the AUS. Okay, so based on the documentation, we'll be updating all the details, and the Encompass will generate the AUS. Okay, that's why the most of the people will ask for the AUS, because it's a very good tool for the underwriting. Okay, now this is out of scope. So out of scope is in the name itself. It is saying that unable to underwrite only. Okay, we will not underwrite the product. We will not underwrite the file where the out of scope is there in AUS. Okay, and this has to be underwritten manually. Manually means all the calculation has to be done manually, and we'll send it to the borrower. Okay. Any questions? Hello.
Yes, sir. Regarding AUS only, I have one question.
Yes, go ahead.
First step for the underwriter is to fill the AUS, or
see, that's what I'm telling you. That depends on the client. Okay. So if you're getting opportunity to work in the live underwriting, you have to fill everything in the Encompass, and you will generate the AUS. Okay. If you get the opportunity to work on the post-close underwriting, and you don't require to fill the AUS in the Encompass, you will get the AUS. Based on that, you will underwrite the file.
Okay.
Any questions? Okay, so with that note, our class is completed. Okay, successfully underwriting course is completed. Take 5 minutes short break and come back. and we'll be having the interview questions discussion. Okay.
Okay.
Exact 5 minutes. I'll be starting the session. Okay. Now the time is 4:06. All right. I'll be starting the session at 4:11. Okay, so I'll be sharing the interview question also with you all. Okay, so you guys can also go through it. And if you come across any questions with the interviews, please you can ask in the group chat, in the WhatsApp group chat itself, as like Imran asked yesterday. Okay, so I'll be providing the answer, and you guys can include over there.
Okay.
Okay, so I have prepared the questions based on the interview I have done so far. Okay, and this is my kind of Bible for the interviews. Okay, I'm asking these questions only.
Okay, sir.
Okay, and that will cover all the scenarios. Also, whatever I have covered in the PPT, okay, that is also based on the interviews. Okay, so you guys must have taken the notes. Okay, so please go through it whenever we are going for the interviews. Okay, yeah, quickly go for the break. Come back at 11:13.
Okay.
Okay, sorry, 4:13. Okay, I'm back, guys. Everyone is back. Hello.
Yes, sir.
Yes, I'm
Okay. What about Viranji and Imran? You guys are back? Bala, can you please check with them whether this is available or not?
Yeah, I'm back. I'm back. I was on system.
Okay.
I was
All right.
speaking in unmute.
Oh, that's fine. Okay. Let me share my screen. Okay. I'll start asking question. Okay. So that you guys can, whoever knows this can answer. Okay, so what are the items we need to deduct from Schedule C partnership income? Sorry, Schedule C sole proprietorship income. Whoever knows the answer, you can raise your hand. I'll call you guys. Okay, so in sole proprietorship income, okay, we need to deduct meals and entertainment and the non-recurring deposits. Okay.
Shakti, can you repeat once again? Sole proprietorship income.
So we need to deduct from the profit. Okay, let's say we'll get the income right from the sole proprietorship income, gross income. From that, we'll have to deduct meals and entertainment and non-recurring deposits. Okay, non-recurring deposit means the deposit which is coming for only 2 months or 3 months is not continuously is coming, right? So for that, that deposit needs to be deducted in the annual income, and the meals and entertainment that has to be deducted from the gross income, so that you will get the net taxable income for sole proprietorship income. Okay. Now, what is the gross up value for pension income?
25.
25%. Okay. How you will verify, or what document you will verify for REO property? That means real estate owned by the borrower. So for the borrower having additional properties, okay, so we'll have to verify the market statement if the lien is available on that property, and the tax and insurance document for that REO property. Okay. Okay, I have given one scenario also in this. Okay, how if the borrower details higher side, okay, then what will be the actions? Okay, what are the documents we need to verify are given? Also, there is another scenario where uh, what is it? The borrower will, I mean, the interview will ask this question: can you describe the challenging underwriting decision you faced and how you resolved it? Okay, have you explained the case, and I explain the problem and what is the risk for that, and I explain the resolution of that also. Okay, so you guys can read it and let me know if you have any questions on that. Okay. I'm sharing the document over here. I'm not sure whether it is can be attached or not, or else I'm sharing this in the WhatsApp group. Yeah, it's gone. Okay. Let me know if you guys are able to see the interview questions. If you can able to download the interview questions document.
Yes, sir.
Yeah, so please go through it instead of discussing it. I guess it will be better. You guys can go through it. Okay, if any questions not understands, okay, please let me know in the WhatsApp group so that I can call you separately and I will explain you. Okay, and also I was thinking to complete this class today itself. Okay, the training today itself, because all the syllabus is covered, and I shared the question bank also for the interview. But I'm thinking to take mock interviews starting from tomorrow. Okay, I'll be taking your phone numbers, and even I have your phone numbers, right?
Okay.
I'll be calling you anytime. Okay, either it's be a morning, either it's be evening. Okay, it's kind of proper interview. Okay, either I will call you or my one of my friend will call you for the interview, mock interview, and they will test your knowledge.
Okay.
Okay, so this way you guys can get prepared for your interviews.
Can you please give some time for that so that
Sorry,
I can prepare?
sorry, Anil.
Yeah, you can make a call from after 2 days or something like that so that we can prepare. Mm.
Okay, so after 2 days. Okay, so I'll
Yeah.
start the call from Wednesday. Is fine.
Okay. Okay, it's fine. So that we
Everyone?
can. Yeah.
Yes, yes. You guys can prepare the question.
Okay.
Okay, and I'll call you guys and complete the mock test, and I'll be giving the feedback on time. Okay, so
Okay.
same after the interview, I'll be giving the feedback also where you need to improve, how you need to improve.
Okay.
Okay, so it's like you will get a call from one of the interview. Okay, I'm not your trainer. I don't. There is no connection between you and me. I'm a new person to you. Like
Okay.
that, the interview will be happened. Got it?
Yes.
All right. So everyone using Teams also, right?
Yes, sir.
Everyone?
What Shakti?
Teams,
Teams.
Microsoft Teams.
Okay. No, I don't have it. I will download.
You're not using that? I think we were connecting through the Teams also, right, Sparna? Previously, before this application, we were using the Teams application only for the training.
Through browser, I connected actually.
That's fine. You can connect through the browser. Okay, in which is I'll be sharing the invite over the email. Maybe Bala will share the invite from company ID. Okay, so that we can connect together.
Okay.
And Bala also will be part of that mock interview.
Okay.
Okay. Anything else you guys have to tell me? Anything else you need to discuss with me about the class? Guys, at least respond now. We are done with the class.
No, sir. It's completely fine.
If you have any doubts, ask
No
in
doubts.
WhatsApp group.
Okay. Viranji?
Yes, sir. No doubts.
Viranji, I can't hear you.
Sir, no doubts, no doubts.
No doubts. Imran, there's a pending sessions for you, right? Uh,
Yes.
we'll be adding you in a morning batch. Okay. So
Okay.
there's currently we have they are going for the. I mean, they have started with the you know the basics and the credit. Okay, and we'll be adding with that in the batch. Okay, so that you
Yeah, it's
can
okay.
also learn the basics in the pivot. Okay, apart from the any more questions? If nothing, we can drop off, guys. I'm leaving you 1.5 hours before. Okay, I was planning to schedule 3 hours because I thought to cover. I mean, it will take more time, but unfortunately, the syllabus is over. Okay, the interview question also I've shared. Okay, so from Wednesday onwards, I'll start the mock interview. Wednesday
Okay.
to Thursday, Friday will be mock interview, and
Okay.
after that, you guys are free for to attend the interviews. Okay.
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 Shaktivel, I have
Yes.
some multiple things. Can I ask if you're free?
Tell me.
In while we are using as underwriter in a Encompass application,
Hmm.
same application we get the documents and same application we input the data, right?
Correct. For the Encompass, we will get the same. Okay. So Encompass in the top of the session now, you will get the document inventory tab. Okay. From there, you will get the document. Okay, and there is a different tabs for the different application. For the AUS also, you will get for the borrower information also, you'll have the different tabs over there. Okay, you'll have to update everything. Okay,
If
if
we
you're using
want,
Encompass, if you're using any other application, okay, and we'll be having different, let's say if you're using for the loan HT, okay, or else if you're using for Lakewood. Okay, so for Lakewood, we just updating the data over there, but the document we will get the EDMS. That is a document generated tool. Okay, so that's what I'm telling you. That depends on the client.
yes, and status AMC we open clarity and equity.
Sorry.
In Citus AMC we supposed to use clarity and
Mm-hmm.
equity.
Yeah. So
Okay.
clarity is for.
That is what input the data, I think.
Okay.
Don't be
Equity.
uh, equity within the documents to indexing the documents, whatever the
Okay.
documents we can see.
Yeah. So that's what most of the time it will be like that only. Only for the Encompass, it is kind of all in inbuilt.
In Encompass, we open documents from the E folder or
E folder.
there is
Yes. E folder.
E
E
folder.
folder. Yeah. E folder. Because I
Okay.
have been worked with Encompass, I think 5 to 6 years back I have worked with Encompass. Okay, so I was doing the PPR and that application, not underwriting. For underwriting, I have used loan HD application. Okay, so that's different case. Yeah, and we will get the LMS also, loan management or loan management system. That is also one of the application for the mortgage. And LOS, that is a actual call as a loan originating system. Yeah, these are
Uh,
the application we were using. So
okay, I
now
have one
currently, are
question.
you working somewhere?
Who me?
Sorry.
Right now, I'm not working anywhere,
Okay.
but I have worked with Encompass, Cisco application,
Okay.
EDMS, Lake,
Oh,
Clarity,
you work.
Equity.
That means you worked with Freedom client.
In first source, I have worked with Freedom Client,
Oh,
Freedom
first source.
Mortgage.
Yes, they have first source. Okay. And Citrix, it's a Cisco.
Cisco in Flatworld Mortgage
Ah,
with
okay.
Encompass.
Okay. The Flatwell is in Bangalore, right?
Yeah, Flatworld Bangalore, G Nagar, beside
JP
the
Nagar. Uh-huh.
JP Nagar, beside the McDonald's building,
Okay. Okay. All right.
Banshankari Road.
Okay. So in Citus AMC, you worked also, right? And
Yeah.
so what was the process you worked over there?
In Citus AMC, I have worked for the segment 6 for post underwriting.
Mm-hmm.
Underwriting.
Okay.
Uh, After that, 8 months, I think, work. After that, I moved to the trade guidelines. COC, tolerance cure,
What
final
is the name,
settlements.
project name?
Sorry,
What was the project name? I'm saying, asking.
trade segment. Trade segment, you know, right?
So that's a process, na? What's the client?
Uh, Client, Rocket Mortgage.
Rocket mortgage. Okay. Okay.
Sorry, sorry.
Okay. So what is
Uh,
the reason you left the job from Citus?
Layoff.
When?
2022 July 1st.
Okay. After that.
After that, after 1.5 year, I was simply sitting in home without any job.
Okay.
I got selected in Modern Virtual
Okay.
Solutions, same for Freedom Client.
Okay.
In status AMC, I got 11.56 LPA, but in
When?
2021,
Okay.
after layoff, after 1.5 year, I got in Modern again. I joined in Modern with a low package, which is a 4 LPA.
How much what was the package in the model?
4 LPA, 4
4
lakhs,
LPA.
30,000.
11 lakh
Yeah,
to 4 LPA.
yes.
Okay. Then you left the job from model also.
After 1.5 year, I left.
Why?
I left Modern. Simply, uh, I was supposed to take training for underwriter. Okay,
Okay.
there's some type of torture in model.
Okay.
9 to 10 hours we have to work and getting low salary, and the two shift is a night 9:30 to morning 6:30.
Okay.
Again, we have to sit 2 more hours. So I got some health disputes. So that's why I left the organization.
So are you willing to join Citus AMC back?
Yeah, I have attended interview few
When?
months back. Um, um, in June, I think, before modern. I mean, before we left. June 2nd or June 7th, I don't know.
Which
In this
location
year,
you attended the interview? Bangalore. Who was
yeah,
taking your interview?
Abhishek.
Abhishek Mystery.
Yeah,
Okay, what was the feedback?
what a feedback. He, what we say, he is very knowledgeable person. He think that same knowledge, whatever he have, same knowledge should be a interview. I mean, for me also, that knowledgeable should be there. He asked me a lot of question. He dug my graveyard. Yes, nearly he asked me 40 questions, 45 questions.
Hmm.
He asked me one question, I remember. Um, can I ask that question?
Tell me.
The same question asked in LinkedIn also. If a borrower self-employed having a first year $10,000
Uh-huh.
income, for the second year he is having $8,000
Hmm.
income.
Huh.
This is a come in into which income? He asked like this. Uh, I said low income
No, it's
because
a variable
yeah,
income. No?
sorry.
It's a variable income.
He said it's a declined income.
Huh. Okay.
Then how you proceed for further to qualify this borrower, and how
Hmm.
you give the final approval for this borrower?
Okay.
Uh, I said I will check any prior tax returns and any assets which is valuable for him, and what is the partnership he is having.
Mm-hmm.
Uh, I said like that.
Uh-huh.
Uh, but I'm not satisfied this answer. I asked you how you will give final approve for this borrower.
Mm-hmm.
So I got some. I kept
In
silent.
model, are you working in the underwriting project?
No, in modern I is supposed to work in a loan setup process. In Mohan, there is a team leader. No, he is a assistant manager.
Who's your team leader?
Mohan Raju.
Morgan Raj from Chennai.
Yes. Now he is in Bangalore.
Okay. So he worked with me also. And now you can. There is one guy is a AM over here, Raja Sholan.
In model.
Yeah, he's also worked with me in
Okay.
first source. All right. So just share your resume with me. Okay. I'll try to get you inside the CMC pack.
For which location?
Huh?
Which location? Bangalore or
Uh, what is your preferred location?
Hyderabad? Because
Hyderabad. Hyderabad, there is
yeah,
no opening only.
yeah, it's only having commercial mortgage. There
So
is
are you
no
working with Pune location?
work from office, right?
Of course.
I'm looking for work from home.
You're looking for work from home.
Yeah,
Okay,
because my
then
parents.
maybe CMC is not suits you then.
Yes, that is what I'm supposed to tell.
Okay, so we'll try other company. I think First Source is now hiring for work from home, even the Chennai location and the Bangalore location.
Yes, I have shared my resume with First Source.
Okay.
HR
Others can
Madhu.
also share, Swarna, Anil, and Viranji. You guys can also share your resumes to First Source
Okay.
company. Okay, and just modify your, experience details. Okay, then you can apply
And
for
what
it.
is the answer for this? How we will consider this and how we will qualify this borrower and how we give the final approval for this?
See that we need to check the multiple documentations. Okay, so there is a declared amount, right? That means the borrower mentioned that amount, out of which what are the expenses that is we need to calculate, right? Okay,
Okay,
so for the partnership, it's a sole proprietorship income. Okay, if the borrower's income is vary year to year. Okay, so we'll have to check and what is the reason for the variable and what is the income for? Is because of the sales or the profit ratios, or is there any decline in their income? Okay, so we need to average it and we need to qualify the borrower.
okay, okay.
We
Thank you
just
for
not like we just add plus 9. So we'll have to add and averaging it by divided by 12. So that will be income for the borrower. See, business always will be variable, right? So only for the partnership we'll get the standard income. For the sole proprietorship we will get the variable income. However, we need to we need to get the averaging out.
okay. You know anyone in First Source
I
from
have
Chennai?
one manager, but she is not connected with me now. I'll try to get. She's in Chennai. I'm not sure whether she's working still with First Source, but I'll try to get it. Okay,
Yeah, sure. Thank
and
you.
we'll let you know, guys, on that.
Okay. Okay, Shaktil. Thank you so much.
All right, guys. So
Have a
thank you
nice.
so much, and successfully we completed your batch, and the interview questions was shared. All the best for your future. If you have any question or concern, you can reach out to me via Teams, I mean WhatsApp chat. That WhatsApp chat I'll be available till this Friday. Okay, after that I'll be exiting from the chat so that you guys can start working on your interview preparations. All right.
You can start mock interview from tomorrow if it's acceptable for you. For me.
Okay. Okay. I'll start. No problem.
Thank you.
Yeah. All right. Bye bye, guys.
Yeah, bye, Shaktil. Bye, everyone.
Bye
Bye.
bye.